The headlines flash across screens worldwide, newsrooms buzz with urgency, anchors' voices rising as they deliver updates that seem almost unthinkable just a few years ago. The world is witnessing a seismic shift, and the story is unfolding in real time. Riyadh accepts yuan for oil. The heart of the world's energy market, once firmly tied to the US dollar, now beats to a different rhythm. Saudi Arabia, the oil giant, has made a move that would have been unimaginable in the past, accepting Chinese yuan for its most valuable export. Moscow and Beijing ditch dollar in landmark deal. Two of the world's largest economies, long at odds with the West, have joined forces to bypass the dollar entirely. Their handshake is more than symbolic. It's a declaration that the old rules no longer apply. Brazil's largest bank adopts China's payment system. In South America, the financial landscape is changing too. Brazil, a key player in the global South, is integrating with China's digital payment networks, making cross-border transactions faster, cheaper, and independent of Western oversight. These are not just news alerts, they signal a deep shift in the global financial landscape. For decades, the US dollar was the bedrock of international trade, the currency that underpinned everything from oil to electronics. But today, on September 21st, 2025, the throne is starting to look less secure. The whispers of a new order are growing louder, and they are speaking in Mandarin. The world's financial axis is tilting, and the implications are profound. Imagine a shipping terminal in Shanghai. For years, the price of every television, every bag of rice, every barrel of oil was calculated in US dollars. Now, that is changing. The numbers on the screens are different, the calculations are done in yuan, and the world's busiest ports are adapting to a new reality. A deal is struck between a Chinese manufacturer and a Brazilian retailer. The invoice is not in dollars, it is in yuan. The payment does not travel through New York. It is cleared through a system built in Beijing. The process is seamless, efficient, and increasingly common. Businesses are discovering the benefits of bypassing the old financial gatekeepers. This scene is repeating itself thousands of times a day in ports and boardrooms worldwide. This is not a story of sudden collapse, but of deliberate construction. While the world watched America, China was quietly laying the bricks for a parallel financial universe. Each transaction, each agreement, is another stone in the foundation of a new system, one that is designed to withstand shocks and offer alternatives. The goal was simple: to create an alternative to the dollar-dominated system. An alternative that would give China and its partners more control and security. For countries wary of US sanctions or eager for more autonomy, this new network is a lifeline. It promises stability, flexibility, and a chance to shape the rules rather than just follow them. In Washington, D.C., policymakers watch the data with growing concern. The dollar's share of global reserves is slowly but steadily declining. The financial order that has defined the post-World War II era is being challenged. A new system is rising, and the dollar faces a true competitor. The world is not turning its back on the dollar overnight, but the foundations are shifting. The question now is not if, but how fast this new financial world will take shape, and who will lead it. China's plan to build a parallel financial system was a meticulous, step-by-step process, carefully crafted over decades. Every move was calculated, with long-term goals in mind, and each phase built upon the last to create a robust alternative to the Western-dominated financial order. The first step was to make the yuan useful for its immediate neighbors and biggest trading partners. By focusing on regional trade, China ensured that the yuan would become a practical currency for cross-border transactions, especially in Asia, where trade volumes were rapidly increasing. China began by signing currency swap agreements with dozens of countries, creating a vast network where the yuan is readily available. These agreements allowed foreign central banks to hold yuan, making it easier for businesses to settle trade in China's currency instead of relying on the US dollar. Next, China established yuan clearing banks worldwide, making transactions fast and cheap. These banks acted as bridges, allowing international companies to process payments in yuan efficiently, reducing costs and delays. China strategically placed these hubs in major financial centers like London, Singapore, and Frankfurt. By embedding itself in the world's top financial cities, China made the yuan accessible to global investors and businesses, further boosting its international profile. The third piece was creating a new messaging system for international payments, independent from Western control. This was crucial for ensuring that China's financial transactions could not be easily disrupted by foreign sanctions or political pressure. China launched the Cross-Border Interbank Payment System, or CIPS, which is immune to American sanctions. CIPS allows banks around the world to send and receive payments in yuan directly, bypassing traditional Western networks like SWIFT. Finally, China focused on its own domestic market, gradually opening its bond and stock markets to foreign investors. This move attracted global capital, encouraging more countries and institutions to hold and use the yuan. This increased demand for the currency and helped establish it as a store of value, not just for trade, but also for investment and savings worldwide. Each of these steps was a deliberate brick laid in the foundation of a new financial order, designed to give China more control and resilience in the global economy. China's strategy was executed with patience and precision over many years, reflecting a vision that extended far beyond short-term gains and aimed at reshaping the world's financial landscape for generations to come. The evidence of this global shift is no longer theoretical. It is unfolding right before our eyes, reshaping the world's economic landscape in real time. Across continents, the move away from traditional Western financial systems is happening in plain sight, with nations seeking new partners and new ways to conduct business. Russia, facing extensive Western sanctions and increasing isolation from the dollar-based system, has pivoted dramatically toward the yuan, forging deeper financial ties with China. The yuan has even become the most traded currency on the Moscow exchange, surpassing the dollar for the first time in history, a remarkable sign of changing priorities. For Russia, using the yuan is not just a choice. It is a necessity for economic survival, allowing businesses to keep operating and trade to continue despite Western restrictions. The change is also visible in the Middle East, the heart of the global oil market, where energy deals have long been dominated by the US dollar. Saudi Arabia has begun accepting yuan for some of its oil sales to China, marking a significant departure from decades of dollar-only transactions and signaling a new era in global energy trade. This signals that the old rules are no longer absolute and that the dominance of the dollar in global trade is being openly challenged. In South America, the trend is accelerating as countries look for alternatives to traditional Western financial channels. Brazil has struck a deal with China to conduct trade in their local currencies, reducing reliance on the dollar and strengthening economic ties with Asia's largest economy. Argentina, facing its own financial pressures, has started using its currency swap line with China to pay for Chinese imports, providing much-needed stability and flexibility. Even in Europe, cracks are appearing in the old financial order, as some countries quietly explore new options for trade and currency arrangements. More and more countries are realizing that they have options beyond the traditional systems, and the global balance of economic power is beginning to shift as a result. To make the yuan a global currency, China needed infrastructure. This is where systems like CIPS come into play. Launched in 2015, CIPS handles both the payment messaging and the actual settlement of funds. Its growth has been explosive, connecting thousands of banks in over 100 countries. Beyond CIPS, China is pioneering mBridge, a platform for instant cross-border payments using blockchain technology. China has also been a world leader in developing a central bank digital currency, known as the digital yuan or ECNY. The long-term vision is clear: to use the digital yuan for international trade. These systems form the plumbing of China's new financial order, independent of the United States. It is the financial equivalent of building a new set of global trade routes. For decades, the world trusted the US dollar without question. But that trust is eroding due to the staggering level of US government debt. Countries worry that the US may print more money to pay its debts, devaluing the dollar. The actions of the Federal Reserve have also caused concern, raising fears of long-term inflation. The US has increasingly used the dollar's dominance as a tool of foreign policy. This has pushed countries to actively seek out non-dollar alternatives. The dollar's share of global foreign exchange reserves has fallen significantly. The world is hedging its bets, and China is offering a ready alternative. China's push to internationalize the yuan is a core part of its grand strategy. By promoting the yuan, China aims to reduce its own vulnerabilities. The Belt and Road Initiative is building financial infrastructure for the yuan, country by country. China is playing a long game, taking a gradual, controlled approach to build trust. A more international yuan serves China's geopolitical goals. A world where major commodities are priced in yuan would give Beijing immense power. It would insulate China from US sanctions and give it more say in global economic policymaking. China is not seeking to replace the dollar overnight. It is building a parallel system that can coexist with and eventually challenge the dollar's supremacy. This is a strategic imperative for a nation with ambitions of global leadership. While the world debates the future of money, China is already building it. The digital yuan, or ECNY, is a digital version of China's official currency. For domestic users, it offers convenience through simple wallet apps. But its international potential is where the true revolution lies. The digital yuan could enable instant international trade payments, bypassing the US dollar. It offers the possibility of programmable money, reducing fraud and disputes in global commerce. China's head start in this area is significant. By setting the standards for the next generation of money, China has a unique opportunity to shape the future of global finance. The digital yuan is a strategic tool to accelerate the internationalization of the yuan. The rise of the US dollar to global dominance was a slow and steady process. It took decades, driven by unique historical circumstances. China's path is different. It is trying to achieve in years what took the US decades. China does not have the same advantages the US had, but it has other tools. It has the power of technology, like the digital yuan and advanced payment systems. The world today is more interconnected and multipolar than it was in the past. China is the largest trading partner for over 120 countries. There is a growing desire among many nations to have an alternative to the US-led system. China is moving with incredible speed, leveraging its economic weight and technological prowess. It is a compressed, accelerated version of the dollar's own history. The story of the yuan's rise is not about the imminent collapse of the dollar. The US dollar remains the world's primary currency, but its unchallenged supremacy is ending. The global financial system is shifting to a multipolar model with several centers of power. This change matters for everyone, creating a more complex but flexible environment for trade. The ability of the US to use financial sanctions will be diminished. For the average person, these shifts will have real-world consequences. A world with multiple reserve currencies could be more stable, but also more volatile during the transition. The financial world we have known is changing, and the change is accelerating. The future will not be dominated by the dollar or the yuan alone. We are witnessing the dawn of a multipolar monetary system, redefining global power and economics.